If you are not sure about whether to invest your money or don't know how to start, don't worry, because today's video is specially for you, because today we are going to be discussing about how to invest. Okay? Hi, it's still your Finance Good 247 channel. I just want to use this medium to say thank you to all my subscribers and everyone watching me all over the world. Your subscribing alone is an encouragement. Thank you very much. So before we go into how to invest properly, let's take a look at what investment is. Okay? So an investment is putting capital to use today in order to increase its value over time. Okay, regardless of how you choose to start investing, put in mind that investing is a long-term endeavor and that you reap the greatest benefit by consistently investing over time. That means sticking with an investment strategy whether markets are up or down. As a newbie in the world of investing, a lot of questions will be running through your mind as regards to how much do I need to invest, how do I get started, and what is the best investment strategies for a newbie, for a beginner. Don't worry, all of these questions will be answered and you'll get cleared, and then you start investing. Okay, how to invest as a newbie? Number one, start investing early. Start investing as early as possible. Starting investment at early age is the best way to build wealth and plan for long-term financial goals. Early investments leads to compounding returns, and then you should know that the time value of money increases over time. So if you are skeptical about investing, you just have to start early. The earlier the better. Okay, the earlier the better. If you have the plan to start investing in 2 years to come, no, start it today, start it now. Okay, so in that 2 years to come, now you will see that your money increases over time. Number two, decide how much you should invest. Deciding how much you should invest depends on your financial status, your investment goals, and what time you need to reach it. One common investment goal is retirement. As a general rule of thumb, you want to propose to invest a total of 10 to 20% of your income each year for retirement. That sounds unrealistic, but as I always say, you can start small and work your way up to it over time. Okay, there's a retirement calculator which can help you to calculate. You can use the retirement calculator to calculate more specific retirement goal. Okay, if you're opportune to have a retirement account at your workplace, then your first retirement milestone is easy. Number three of it, open an investment account. This investment account is sometimes called brokerage account. This account is what investors use to buy and sell securities such as stocks, bonds, index funds, name it. These accounts include standard brokerage accounts, kids investment accounts. In deciding on how to invest, you need to open an investment account which holds cash and investments which are stocks, index fund, mutual fund, etc., which allows you to buy and sell and realize your financial goals. Regardless of the country which you are, you can look for a registered investment advisor who can set up an investment account for you, and make sure you do the following. Check to see what type of investments you can purchase through the account. Ask questions about different type of charges and fees regarding the type of investment you purchase, and then shop around to compare fees and charges with other firms. Be intentional about the investment account you want to open. Okay, after you might have opened the investment account, number four of it is pick an investment strategy. An investment strategy is a systematic approach to making investment decisions based on principles, rules, and guidelines to select investment portfolio. With so many investment strategies available and constant fluctuation in the market, it's easy to become overwhelmed and make sudden investment decisions. This is why it is so important to pick an investment strategy and stick to it, because it will help you avoid emotional decisions, help set long-term goals, provide consistency, help minimize risks and provide peace of mind. Already you know this is what you are facing, so your heart is at peace. We should put in mind that individuals have different profit objectives. Your profit objective is different from mine, and their individual skills make tactics and strategies appropriate. As a newbie to investing, your strategies depends on your saving goals, how much money you need to reach them, and the time horizon, that is the time frame. For instance, investments such as shares should be invested in with a time frame of a minimum of 5 years in mind, and the risks involved. Some choice involves a trade-off between risks and returns. Most investors fall somewhere between accepting some risks for the expectation of higher returns. Higher risks, higher returns, okay? Another thing to look into when it comes to how to invest is understand your investment option. Once you decide how to invest, you will choose an investment that will work for you. You will need to choose what to invest in. Every investment carries risks, and it's very important to understand how much risk does that same investment carries and whether that risk is aligned with your goals. Okay, the most popular investments to newbies, that is those who just started the investing business, are stocks, bonds, mutual funds. Stock is a share of ownership in a single company. We have several companies which you can buy their stocks and then sit and relax and watch your investments grow as the company grows. As a shareholder in a company, you tend to achieve so many benefits. As the company grows, the shares increase in value, the revenues increase, and so your shares also increases. So go and invest in that trusted company. Bonds are official papers given by governments or a company to show that you have lent them money and they will pay you back at a particular interest and time. Okay, so whenever your government, regardless of your country, you can buy bonds from your government or companies within your country whenever they are on sales. Sometimes it could be that a company needs a particular sum of money to achieve a project, but they don't have that money at that time. They want to send their bonds to individuals, and when you have the opportunity and then you are capable, you can get the bonds and they will pay you back with interest. By doing that, you are safeguarding the value of your money. We have the mutual funds. As the name implies, it allows you to pool your money together with other investors to purchase a collection of stocks, bonds, and other securities that might be difficult to recreate on your own. Mutual fund can also be called portfolio. This portfolio is so beneficial that it assures you advanced portfolio management, risk reduction, reduced transaction costs, and so many other benefits. Okay, what about the risks? You share risks among yourself, so the risk is minimal. If you have these particular investments you want to embark on and you don't have the means, you can call 2 or 3 persons together, people you so much trust, and then you pull your resources together, pull your money together, and achieve this investment portfolio. And then you will have your own benefits, others will have their own benefits, and then life goes on. Okay, if even pulling people together, you are sharing the risks, sharing the costs, the expenses that comes along with the investment, and things will be okay. So as a newbie, with all of this said, you can start investing today and stay financially healthy. I'll see you again next time.